Hey there everyone, Dave Keller here with Market Misbehavior. Today we're going to be focusing on some compelling opportunities outside of the technology sector. Look, let me start off by saying I don't hate technology. Technology stocks generally have been very good in 2026, with some exceptions. However, with technology, that particular sector making up about 40% of our US benchmarks, I think it's helpful to look outside of technology and remember that there are other areas of the market showing quite a bit of strength these days. So today we're going to use the Seeking Alpha platform. We're going to look a little bit about sector leadership and leadership rotation. I'm going to show you the quant scan that I use on Seeking Alpha regularly to try to surface those names, probably outside of the large cap space, more in the mid cap and maybe even the small cap space, demonstrating the characteristics of previous market leaders that score well using the quant model on Seeking Alpha. And then I'll show you some specifics on each of those charts that I will be watching for the 5 names that we'll highlight. By the way, make sure you watch to the end because I've got one bonus name to share with you there. To start off with, we're going to look at the Seeking Alpha platform. What I like to do when I'm starting here is look at the market data section, because then we can, really in a tabular format, just try to make sense of the equity markets from a bunch of different angles. And below the major US equity ETFs, we can get to the sectors, and that's where we're going to focus our attention. And here's why. If we go to the 1-month returns and sort them in descending order, technology is nowhere near the top of the list. As a matter of fact, technology is one of the 3 sectors that have actually gone down in the last 1 month, so from early June to early July of 2026. Energy, of course, the worst performer, with crude oil prices generally coming down around headlines in the Middle East. The XLE down over 5% for the last month. Technology and communication services both down as well. And again, the problem is tech is about 40% of our U.S. benchmark. So that sector, that one sector being down, is a big deal. But while those sectors have been struggling, look at the returns you've seen from healthcare. The XLV up 7.5%, financial services up 7.2%, even industrials up almost 5% for the last month. So while I'm a chart guy, tabular data like this I think can be remarkably helpful just to help you make sense of things, to help you recognize maybe some things that might surprise you when you look at performance over different time frames and really focus on what's been working. And only then can we make an effective, conversation or thesis about what may work tomorrow. Now, it's talking about the high level, talking about that leadership rotation, talking about some of the strength in sectors like healthcare and financials is great, but what individual names can we surface? This is where I like to lean into the quantitative model on Seeking Alpha. And the quant team there, led by Steve Kress, does a fantastic job, I think, managing this quantitative strategy and surfacing some names that score pretty well. There's a couple ways you can get to it. What I would do is on the left, go to things like Top Stocks or Stock Screener. That'll get you into the scanning engine using some of the quantitative capabilities. But I've taken the liberty of setting up my own custom scan. And while their kind of preset scans are great as a starting point, if you really want to make the scan results resonate with you in your process, we want to start to customize. So this is going to tell you what I'm going to do, but I'll show you on a screen here as I edit the scan. This is exactly what I'm doing. So I've selected basically everything but technology. So I'm not including technology. I'm just looking at the other 10 S&P 500 sectors. Now, I'm eliminating small caps. I'm just looking at mid, large, and mega cap. But again, this is just to give us some names that I'm assuming you might be familiar with. When we get into small caps, a lot of times it's a name that we've not ever seen before. So I like to use names as examples that we might be familiar with. The other things that I'm really filtering on, to be honest with you, using the quantitative model, I'm only looking for stocks that are rated a strong buy. What you have to remember is the quant model, as I'll show you in a minute, actually comprises a number of different factors, things like momentum and valuation and other things. And so the overall kind of composite rating has to be at the strongest level. So I'm just looking for the best of the best out of these 10 sectors that I've highlighted. Now, for me, I am a chart guy, as you probably know. Price momentum is very central to my process. Generally speaking, I want to buy strength. I want to buy charts that are in a fairly good position. And I found by looking for stocks where the momentum rating is somewhere in the A's, from A+ to A-, I'm pretty sure the charts are going to be fairly constructive. They're going to be the type of charts that I'm probably happy with. So I ran that scan moments ago. I got about 90 stocks that came up that check all of those boxes. And here they are. And as you could probably guess, we can click on any of these columns to highlight them or to sort by them, that is. We can see that the momentum rankings are all pretty good. I'm actually sorting by the quant rating in descending order. Now, what I found is this is not the end of our process. This is just the beginning, right? Now that we have a working list of stocks, then we want to start to dig into them a little bit further. And I'll show you the first name we're going to talk about. I think appropriately for me, Dave, is Dave Inc. This is a consumer finance name that you may or may not be familiar with, but I just want to show you that when you select one of the stocks, you start to get a lot more data on them. We're going to start with the summary tab just to understand sort of the general take here. There's analysis from the Seeking Alpha analysts and from those in the community, news related to the stocks. There's a chart here, but I like to focus on the right side because this is where we can start to summarize some of the quantitative methodologies. So the factor grade section right here is an important one because there's 5 main pieces to that quantitative rating, right? So we can see that overall, this is 4.94 out of a best score of 5, so pretty good. It's rated as strong buy, which means it's the top rating. But that rating is a composite of 5 different models. A valuation model, where you can see Dave actually doesn't score particularly well. It's a D+. That's because the price is so high relative to the earnings, right? The prices have accelerated. The earnings have remained fairly stable. So stocks in strong uptrends often have pretty low scores on the valuation side. But look at the grade A to A+ on growth, on profitability, on momentum, and revisions. And you can drill into any of those to understand them a little bit further. And don't forget those little question marks I found as I was just getting comfortable with Seeking Alpha became quite helpful. So first stock we're going to look at is called Dave Inc. Again, very appropriate given my own name. I want to look at the chart of Dave just so we can see how this sort of looks. So this is looking at the last year and a half. We can see that the chart has actually started to really strengthen just in the last couple months. And again, what I like to do, once I've filtered based on the quantitative methodology, once I've filtered based on momentum, I can then look at the charts because for me, the charts are essential, right? They're central to the way that I think about stock picking and think about security selection. So it has to have a good chart. So once I've filtered pretty good companies according to the quantitative model, let's look at the chart here. So what stands out with the chart of Dave? Well, obviously we're in an uptrend of higher highs and higher lows. This is sort of a base breakout within a base breakout, right? We can see that most recently we've broken above a level of around 280. That was resistance in April and then again in late May. We just broke above there, and from that point on, the trend has continued higher. The moving averages are all sloping higher, right? So I think that's a positive configuration moving average wise. The relative performance is strong. This is a stock that's outperformed the S&P over the last 6 months quite significantly. But we can also look at like the weekly chart and recognize that that last year and a half is right here. So that little base we were looking at was this little breakout right there. We can also see a much larger basing pattern from the latter half of 2025 into the first half of 2026. So this recent breakout that we've seen in the second quarter continuing now in Q3 seems to be the part of a much larger rotation higher. Now, if there's any problem I have with the chart of Dave right about now, it's that we are overbought recently on the weekly chart. We are also overbought recently on the daily chart. Just today as we're recording this video on Wednesday, July 8th, you can see that the RSI has come out of the overbought region on both the weekly and daily charts. Now, if you look to the left on the chart, you will find that when we become overbought, that on its own is not necessarily a bad thing. That often means that the price is going up pretty well. But when we come out of the overbought region, that usually means we're in a bit of a tactical pullback, if not something more significant. In the last 3 or 4 times we've been overbought, certainly been a meaningful pullback after we come out of the overbought region. So is today the day that I would probably get aggressive on Dave? Probably not, because based on the fact that we've been overbought for a week and a half and now we're coming out of the overbought region, I'd probably be looking for some sort of tactical pullback, a short-term pullback within a longer-term sort of breakout structure. So stock number 1, Dave Inc. This is in the financial sector. It's a consumer finance name. Again, I think a base within a base. The recent breakout, the relative strength, all impressive. The overbought conditions tell me maybe I just want to put this on a watch list and look to see if we find new signs of accumulation. Second chart I wanted to find is in that same sector, but a different group. This is in the investment banking and brokerage group called StoneX Group. ticker SNEX. This one a little bit different because it's actually had a pretty good run higher. If you think about the chart of Dave Inc., sort of like right about here, right? So this is that sort of tactical pullback that I was looking for. Look at what happened here in May. We were overbought for actually almost a month. We rotated lower. We bounced on the 21-day EMA. We eventually got a little bit further. The RSI got down between 40 and 50. That ended up being a pretty good bouncing point, and we never really pushed below the 50-day moving average. Similar here, we were overbought for a couple weeks. We came out of that overbought region. We're down to the 50-day moving average. Perhaps this is that time where we identify that tactical low. Maybe this is the time I want to be looking for some sort of opportunity for rotation higher. So I think StoneX Group is actually a pretty good illustration of what could happen with Dave Inc., which is nice run higher, new 52-week high, overbought condition. We come out of the overbought region, then we pull back. Do we make that higher low? And if we would break down a little bit on a chart like this, I always look to the left and look for the most recent swing low. So for me, like 105, that would be a pretty clear stop for any sort of long position that I would take today, because that would mean, as long as we hold that, that would mean we're still holding the most recent swing low. We break below 105, could be something more significant. So StoneX, ticker SNEX, another name that scores quite well. Pretty interesting chart, I would say, has already pulled back a little bit. Now, top performing sector in the last month has been healthcare. There's been a number of interesting healthcare names that I saw in here. This is one that caught my eye, healthcare facilities group called PACS Group, PACS. Well, look at this chart. This is actually a different one because it's just starting to break out. One of my predecessors at Fidelity, a guy named Bill Doan, made a career by looking for what he called big base breakouts. This is basically a big consolidation phase, a sideways phase of parallel highs and lows, right? Consistent resistance, consistent support. That's a sideways market. That's a consolidation phase. If and when we break above the upper boundary, that's the signal that maybe we want to, to play the next move higher. Alan Shaw, the late Alan Shaw, who ran the technical research team at Smith Barney for many, many years, used to say, the broader the base, the higher in space. So here we have an example, PACS Group, which has been in a sideways consolidation phase for the entirety of 2026. And just in the last couple of weeks, we've rotated to the upper end of that range. And over the last week and a half, we finally broke above $42 a share. This is the type of chart I'd probably set a price alert. And if we get above 42, that's the sign to maybe take a shot. We're overbought, similar to what we saw recently in the last couple of days. So looking for some sort of tactical pullback is an opportunity to ride maybe the next move higher. But I would say a chart like this, compelling because it's a big base breakout, right? Just breaking to new swing highs, and perhaps that's an interesting opportunity. So already we have seen, by running this quantitative scan on Seeking Alpha, we find a variety of different charts on here. But by scanning for strong momentum names, we make sure that the charts are probably in some setup that I'm probably going to find pretty helpful. For me, I would never just use this list of stocks without going one by one and really digging into them a little bit deeper. The charts that we're looking at here, I think, tell part of the story. Using the drill down capabilities can be really helpful as well. I should take a moment, by the way, to let you know, Seeking Alpha awesomely is giving my viewers 10% off a new account. If you want to check it out, go to marketmisbehavior.com/Seeking Alpha. By the way, they actually have a virtual event coming up next week. Steve Kress, who's actually the head of the quantitative team, the man that designed the quantitative model that I'm featuring here in today's video and still manages that group, he will be leading a discussion focusing on the second half of 2026. Lessons learned from the first half of the year using the quantitative model to think about opportunities in the latter half of the year. Only Seeking Alpha Premium members will have access to that live virtual event. Also, a companion article that will come out and lay out all the evidence soon after. Again, you can check it out at marketmisbehavior.com/Seeking Alpha. And again, thanks so much to my friends at Seeking Alpha for being long-term supporters of Market Misbehavior. All right, two more charts I wanted to share with you. One more in the healthcare sector. This is BrightSpring Health Services, BTSG. This is in the healthcare services group. And if we go BTSG, This one I wanted to include because it is just a long and strong, consistent uptrend, right? I was taught that the most bullish thing a chart can do is go up. So charts like this I think of as innocent until proven guilty. For the last 12 months, after bouncing off of the 200-day moving average at the end of July of 2025, from August 25 through this week, we have seen this stock make consistently higher highs. I actually believe it's made a new 52-week high every month for the last 12 months as it's continued to push onward and ever upward, as we like to say. Is this the end of the move? It could be, for sure. We never know what might happen tomorrow, but I don't see anything on the chart really suggesting to me that there's any sort of internal weakness. This looks like a consistent uptrend. There are reasonable pullbacks along the way, which have always resolved higher. At some point that will change, but charts like this I think of as core names to focus on, the types of names you might build a portfolio around, and with strong trend performance, with strong moving average configuration, with strong momentum and strong relative performance, I would say a chart like this checks all the boxes. So it's interesting that on a scan like this, we find names that are just earlier on in a potential breakout. Also names that have been in strong uptrends for 12 months, right? And everything in between as well. All right, one more chart I wanted to share with you. This is MYR Group. This is actually in the industrial sector. So we've basically featured 2 financial stocks, 2 healthcare names, and 1 industrial name. So as promised, 5 names outside of the technology sector. Now, this one, I think the other ones are in various configurations, various different technical setups. I think this one also provides a different type of setup to watch. For me, this is a wait and see mode, right? Jesse Livermore, infamous trader from the early 20th century, is quoted as saying, there's time to go long, time to go short, and time to go fishing. I think it's clear when charts are in a positive trend and accumulation phase. I think it's often very clear when stocks are in a downtrend or a distribution phase. But then this is an example of a name that's actually in a sideways or consolidation phase, right? We can see clear resistance here around 480. That's from back in May. We can see a breakout above 480 in late June, but it failed. We actually rotated back into the consolidation phase. We also see support around 400, 405. We have recently gone back to test that level of support. So pretty clear basing pattern, right? Consistent resistance, consistent support. What do we do with a name like this? Well, I would say as a trade, as a swing trade, maybe we play the bounce off of support potentially, right? Play a retest of that previous support level and move higher. And the fact that it scores so well based on the quantitative methodology that we're featuring today, maybe that gives me confidence that we'll have a nice bounce on the chart. On the other hand, maybe the more conservative approach, wait for that breakout, right? Wait for a confirmed break above 480 that holds. Look for a follow through above $500 a share for the first time and use that as a big base breakout. Maybe I take a partial position now and I wait for that breakout above 480 to complete the position. Charts like this, I think, provide a pretty clear, pretty straightforward setup. And again, the fact that it scores well using the quantitative model tells me this is probably a good company in a fairly good position. Now it's all about the timing, and this is where we can use the chart to refine our entry and exit points, think about potential upside return, but also think about managing some potential downside risk. I think I promised one bonus name, right? If you notice an energy stock or two on there, if you go down the list, you're going to find names like Valero, Marathon Petroleum. Even though the energy sector has been one of the worst performers over the last month, you're finding a number of oil and gas names on here. So what gives, right? Because crude oil prices have not been particularly good. Well, we have to remember not to get too deep into the fundamentals, but something like Valero or Marathon Petroleum, you have to remember not all energy stocks are tied directly to the price of crude oil, right? We tend to think of like the big, exploration names, big integrated oil names as really sensitive to the price of crude oil, because if crude oil prices go down and their job is to get oil out of the ground and sell it, what they're digging out of the ground is less, has a lower price, and so that's probably not as good for their revenues or, for their earnings. But you have to remember that Valero and others are sort of downstream names, right? These are names that actually sell the stuff that you refine the crude oil into, right? They're selling like gasoline types of products. So lower crude oil prices actually could be a good thing for them, because that's what they're actually using to then turn it into something else and then sell it down to the end consumer, right? So we can fuel our cars and trucks. So there's a thing called the crack spread, which is basically the difference between the crude oil and bringing it out of the ground, and then the value of those refined products that can be created from crude oil. And Valero and others are, their opportunity lies more in the crack spread, which has actually been fairly favorable, even though crude oil prices, crude oil prices have been fairly negative. So charts like VLO and MPC don't look a lot like the chart of crude oil. They actually look pretty good. Looks more like some of the financial and healthcare names we've been talking about, to be honest with you. Here's a chart of VLO making a new 52-week high. MPC, very similar setup. And again, what I love about this sort of scan, right, and looking for strong, rated names based on this quantitative methodology, sometimes I'm surprised by the types of names that come up. And then I can dig in a little bit and say, hold on, why is Valero or Marathon Petroleum doing so well, even though crude oil prices are lower? And that's where you start to learn, oh, okay, this is actually a fairly favorable environment for them right about now. So what do you think? That's 5 and one or two bonus names to throw at you. These are names that score pretty well based on the quantitative methodology hosted at Seeking Alpha, and using some technical analysis tools to really identify some potential returns, some potential risk using best practices of technical analysis. Are there any charts that you saw on the list here today that look even more interesting to you? Make sure you drop a comment below and let me know. By the way, as a reminder, Seeking Alpha is the platform we're featuring today. They have a special deal for all my viewers, 10% off a new account, and they're doing their top stocks for the second half of 2026 live virtual event coming up on July 14th. So if you sign up today at marketmisbehavior.com/Seeking Alpha, you'll have access to that members-only event, also the companion article that will come out soon after. Thanks so much to my friends at Seeking Alpha for supporting Market Misbehavior. Thank you for watching. I hope you found these ideas and this discussion interesting, and I wish you the very best in your investing journey. For Market Misbehavior, I'm Dave Keller, reminding you it's always a good time to own good charts. Take care, folks.